Everyone. Good evening, everyone. Is everyone hearing me? Good evening, everyone. Okay, so today we are looking at costing methods as our next topic. So I hope everyone has come with the requirements for MDC, because now this is a topic that involves computations. So I don't expect anyone to say that they don't have a calculator. So let's first write something brief about costing methods, then we can explain in detail. So heading, costing methods. So we write that these are methods used. These are methods used in establishment. In establishment of total costs. These are methods used in establishment of total costs. And then write that total costs comprise of variable costs, brackets, we write direct costs, and fixed costs, brackets, we write overheads, brackets, we write overheads. Now, we are talking about costing methods. These costing methods normally help us to establish the total cost that the company has incurred during the period. So when we are talking about total costs, we are implying the variable costs and the fixed costs. Variable costs themselves are called direct costs. When we talk about direct costs, we are meaning costs that can easily be traced. So these direct costs can be traced because, for example, when we are talking about the variable costs, we can say if you're paying someone money per hour, so maybe you're paying them 10,000 shillings per hour. It means that you can easily trace the amount that someone is going to get. For example, if someone works for 5 hours, that means you know that you're going to get 10,000 times 5, which is going to give you 50,000 shillings. So such costs are easy to trace, especially to their original source. So I know that I'm incurring this much on the labor costs because of the hours people spend on the work. So such costs are easy to trace, and that's why they are called direct costs. And in nature, they are usually variable costs. And that's why they are always per something, maybe per hour, per unit, and so on and so on. But when it comes to the fixed costs are also known as overheads. Another name for overheads is indirect costs. Such costs are not easy to trace to their original source. For example, if you have a labor cost which is probably per month. So I'm paying people salary for every month. Meaning that whether someone works or they don't work, I still have to pay them the agreed amount of money. So if we agreed on 1 million shillings per month, whether someone works or does not work, at the end of the month, I'm going to pay them their 1 million shillings. So such a cost is not easy to relate. You cannot explain the output of someone corresponding to the money you are paying them. So it is indirect in a way that it is fixed. It is per month. Whether the person works or does not work, you have to pay them the 1 million shillings. So such a cost becomes a fixed cost and it becomes an overhead or an indirect cost. So an indirect cost is not easy to trace. If, let's say, you have a certain cost, for example, you have water bills. Maybe you have a full floor which has different rooms, and you're paying the landlord rent for the whole building worth 20 million shillings. Whether you're using certain rooms or you're not using them, the landlord is waiting for his 20 million shillings per month. So that becomes a fixed cost or an overhead. We don't know the basis. He's not telling us to pay per room. He's just telling us to pay for the entire building. Whether we are going to use it or we are not going to use it, for him, he needs that amount of it. That becomes a fixed cost or an overhead. So when we are looking at costing methods, our challenge is not the variable cost or the direct cost. No, our challenge is on the fixed costs. That's where the problem comes from. Because these costs are not easy to trace. So that makes it difficult. If I'm producing my products A, B, and C, and the landlord is telling me that pay rent of 20 million shillings. So at the end of the day, each of these products is sold separately into the market. Each of them is bringing its own revenue. So each of them has to contribute towards the 20 million. But which basis am I going to use to say product A should contribute 1 million, B should contribute 15, C should contribute 3 million. What is my basis of doing that? So it becomes really difficult, because if I still get 20 million divided by 3, that is not also fair, because product A, I may be producing less than product B. And if I'm producing less on product A, then why is it that I'm giving them the same amount of money? That would be unfair. So that's why under costing systems, we had to come up with methods that we can use to deal with the overheads. So we write that there are two methods used. There are two methods used in apportionment of overheads. There are two methods used in apportionment of overheads. And these include, and these include, and these include one, and these include one, traditional costing, stroke absorption costing system. Then 2, activity-based costing, brackets, ABC system. Brackets, MDC system. So we start with the traditional costing system. So let's
Madam,
write it. Yes.
Madam, help me the heading of this costing system.
The heading is costing methods.
Okay, thank you.
So write traditional costing system. Start with the traditional costing system. This is a system. This is a system which involves using a single overhead absorption rate. This is a system which involves using a single overhead absorption rate. This is a system which involves using a single overhead absorption rate, brackets OAR, in allocating overheads, in allocating overheads to different products, in allocating overheads to different products or services, in allocating overheads to different products or services. In this case, the OAR, in this case, the OAR will be computed as, in this case, the OAR will be computed as, then write this formula. OAR is equal to budgeted overheads over budgeted activity level. OAR is equal to budgeted overheads over budgeted activity level. Budgeted overheads over budgeted activity level. In this case, the activity level, in this case, the activity level is either labor hours. In this case, the activity level is either labor hours, machine hours, or output, but mainly labor hours, but mainly labor hours, but mainly labor hours. This is because the system, this is because the system was mainly labor intensive. This is because the system was mainly labor intensive. And then write that this system was used at a time, when overheads, this system was used at a time when overheads, this system was used at a time when overheads formed a small fraction. This system was used at a time when overheads formed a small fraction of the total costs small fraction of the total costs, and organizations were producing a narrow range of products. And organizations were producing a narrow range of products. And organizations were producing a narrow range of products. And organizations were producing a narrow range of products. Narrow range of, that's how we can explain the traditional costing system. So it's called traditional, just like the name suggests, it was traditional. So this was the very first costing system that was used at a time when organizations were labor intensive. So at that time, technology had not, because technology had not yet come in, companies were mainly labor intensive. So at this point, organizations were only producing a narrow range of products. So you'd find a manufacturing organization producing maybe one product. So you find that if it's a manufacturing company, they were producing only one product. Like you find Pick Fair was producing only books. That was their output. So they didn't have a narrow range of products. They only had a few items. Now, that is the history of the traditional costing system. So this traditional costing system uses a single overhead absorption rate. Whenever you want to apportion an overhead, you must compute what we call an overhead absorption rate. Like I told you that if I have my products ABC and I've incurred maybe electricity bills worth 20 million shillings, I have to see how much goes to A, how much goes to B, and how much goes to C. So I do that by using what we call an overhead absorption rate. So once I don't have an overhead absorption rate, then that implies that I'll not be able to allocate my overheads to the different products or services. So the principle of the traditional costing system is to use a single overhead absorption rate. And to compute this overhead absorption rate, we get the budgeted overheads that they incurred during the period. The examiner will tell you the overheads they incurred. So we add all of them to get the total, or the ones they are budgeting to incur. So after that, we divide by the budgeted activity level. When we talk about an activity level, we can either use machine hours, labor hours, or the output or the units. So in other words, because this system was mainly labor intensive, we normally use labor hours. So if the examiner gives you machine hours and he has not given you labor hours, it is okay to use machine hours because labor hours are not there. But once the labor hours are there, we use labor hours. So also output can help you apportion this cost here. So if my rent is 20 million, probably product A will produce 5 units. Product B will produce 10 units, whereas product C will produce 5 units. So I can say that to fairly allocate this 20 million to the products, my basis is going to be the output or the units produced. So I look at the total units or the total output. So the total units are 5 plus 10 plus 5, that is 20. The total cost I'm incurring is 20 million. So product A, what I'm going to allocate to product A, I come and I first of all compute an overhead absorption rate. The budgeted overhead, probably this is the overhead I want to apportion, 20 million. Divide by the budgeted activity level, which in this case is the total output. So my total output is 20 units. I come and I divide by the 20. So that means I have here 1 million shillings per unit, because up I have shillings, down I have units. It means that each product is going to be charged 1 million shillings per unit produced from there. Meaning that if I'm to see how much product A is going to incur, I'm going to get the 1 million times the number of units product A brings. So product A, we've already seen that we've assumed the 5 units. Let me share the screen again. So product A, we've assumed 5 units. So that means I'm going to get 1 million, which is the rate, times the 5 shillings to get the cost there. So I just get here 1 million times the number of units. There are 5 units. So there are 5. So I say 1 million times 5. So meaning that any product that has the highest number of units, that is the product that should be charged more overhead costs. So at the end of the day, this becomes 5 million shillings.
Madam Sarah, excuse me, just an inquiry.
Yes.
How are you getting the denominator at 20 that is down?
The total output. So I'm assuming that if the output, the total units are 20. You see product A, there are 5, product B 10, product C 5. So meaning that the total is 20 units.
Okay.
So meaning I want to see how do I apportion this 20 million shillings. Maybe it is the rent incurred during the period. So I get the total. You see the formula is budgeted overheads 20 million divide by the budgeted activity level. So in this case, the activity level, we have units. So divide by the total units 20 to give us 1 million shillings. Meaning that product A is having 1 million times 5, which gives you 5 million shillings. Product B is having 1 million. So product B is 1 million times the units there. The units there are 10 to give us 10 million shillings. Product C, we have 1 million times the units 5. That gives us 5 million shillings. So at the end of the day, we've distributed the 20 million shillings amongst the 3 products. So in that case, you've used what we call the traditional costing system. And in this case, you can see that the overhead of 20 million shillings has been fully exhausted. So it's only fair that a product which has more units should have a lot of costs as compared to a product which has less units. So that's why we need an overhead absorption rate, so that we have fair allocation of the overheads. So we write that. We write that.
Yes, madam.
So let's write that NB. With the introduction of advanced manufacturing technology, brackets AMT, with the introduction of advanced manufacturing technology, brackets AMT, AMT. A better system had to be introduced. A better system had to be introduced. A better system had to be introduced to support the AMTs, to support the AMTs, to support the AMTs. This led to the introduction. This led to the introduction of the activity-based costing system. This led to the introduction of the activity-based costing system, brackets ABC. This led to the introduction of activity-based costing system, brackets ABC. ABC.
Can you come again after NB you said?
With the introduction of advanced manufacturing technology, brackets AMT, a better system had to be introduced. So what we are trying to say here is that the traditional costing system was labor intensive because of the narrow range of products that were being produced. But with time, companies realized that no, we need to perform better. I should not be known for only one product. I should have very many products I'm known for. But all that you cannot do without technology. It's technology to enable you produce a wide range of products. So that's why they introduced advanced manufacturing technology, advanced. You see, nowadays, it's very hard to find a company producing one product. You find like Mukwano alone, Mukwano Group of Industries. They have cooking oil, they have Vaseline, they have plastics, they have. Now, in the cooking oil alone, there is a breakdown. There is edible, there is, so there is very many types. Vaseline, they have herbal, they have ordinary, they have, so even each product, they still break it down into other products. Plastics, you find them having cups, having plates, having basins, having buckets. So you find that at the end of the day, a single company is having over 1,000 products it's producing. And at the same time, so they are doing all this at the same time. The cups are being produced together with the plates and so on and so on and so on. So all this cannot be done when you're using labor. You must use technology. And when technology comes about, it replaces the labor. Labor is only there to program the machines, not to do the actual work. So that's why the traditional costing system could no longer work, because we shifted from labor to technology. And yet for it, it was programmed for technology. So that's why the traditional costing system was phased out, paving way for the activity-based costing system, which is a better system, especially the fact that it can accommodate the technology. So let's write a heading, activity-based costing system. Activity-based costing system. Activity-based costing system, brackets ABC. So write that this is an alternative system to the absorption costing system. This is an alternative system to the absorption costing system. Remember, absorption is the same as traditional. When I said absorption, I'm meaning traditional.
Madam, pardon.
This is an alternative system to the absorption costing system. So when I say absorption, I'm meaning traditional. So write that it involves identification. It involves identification of the factors which cause. It involves identification of the factors which cause the organization's major activities. The organization's major activities which cause the organization's.
From the start. It
It involves identification of the factors which cause the organization's major activities. It involves identification of the factors which cause the organization's major activities other than just labor or machine hours used. Other than just labor or machine hours used. Other than just labor or machine hours used and products produced. And products produced. And products produced. So we write that in this case, overheads are charged to products. In this case, overheads are charged to products. In this case, overheads are charged to products on the basis of their usage. In this case, overheads are charged to products on the basis of their usage. On the basis of their usage of the factors causing the overheads.
Excuse me.
Factors. In this case, overheads are charged to products.
Pardon, madam, from in this case.
In this case, overheads are charged to products. In this case, overheads are charged to products on the basis of their usage. On the basis of their usage of the factors causing. On the basis of their usage of the factors causing the overheads. On the basis of their usage of the factors causing the overheads. On the basis, in this case, overheads are charged to products on the basis of their usage of the factors causing the overheads. Using cost drivers. 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 So write that a cost driver, is a factor A cost driver is a factor. A cost driver is a factor that causes. Cost driver is a factor that causes the costs of an activity. A cost driver is a factor that causes. Cost driver is a factor that causes the costs of an activity. The cost of an activity that causes the costs of an activity.
Madam, pardon.
A cost driver is a factor which causes the cost of an activity. The cost of an activity. So, what happens here is that we are talking about the ABC system. So, just like the name suggests, ABC, activity-based costing system. Activity-based costing system. So, what this one means is that the costs are basing on activities. That's why it's called activity-based costing system. So the costs are based on the activities, meaning that if an activity does not take place, the cost is not going to be incurred. What do I mean by this? For example, if you are incurring a cost on transport, the first question we are going to ask, what is the mileage? Because if we want to refund your transport cost, we are going to depend on the mileage. Maybe you're saying you've covered 20 kilometers. So your transport cost is maybe 2 million shillings and you covered 20 kilometers. But what activity did you undertake? Traveling. So traveling is your activity. Meaning that if you had not traveled and you had stayed at your home, you wouldn't have incurred the transport cost. So the transport cost is based on traveling. And what is under traveling? The mileage. Meaning that the more kilometers you travel, the more transport cost you're going to incur. The less kilometers you travel, the less transport costs you're going to incur. So, what happens with activity-based costing system? We always identify what we call cost drivers. Which factor is driving that cost? Mileage. So if it is transport, it is mileage. So the more kilometers you're traveling, the more transport cost you are incurring. But which activity is there? Traveling. So the cost driver, kilometers. The activity is traveling. For example, if I have rent, what is the cost driver? Floor space. Meaning that someone who is renting a building of 6 floors and another person who is renting a building of 1 floor, they are not going to incur the same rent because the floor space varies. So floor space can be in square meters, whatever you agree with the landlord, or it can be according to the rooms that have been rented to you. That the more rooms you rent, the more rent you're going to incur. So if you want a 3-bedroomed house, it is a 600. 2-bedroomed house, 400. 1-bedroomed house, 200. So you decide what you want. So in that case, the cost driver is the floor space. So when we are using MDC system, each cost, we must find its cost driver. For all the costs, we must find cost drivers. We don't believe that every cost comes as a result of output or labor hours. We believe that every cost has its own cost driver or what drives it. So in MDC system, once we fail to identify the cost drivers, then it becomes very hard for us to know what we are going to do. So let's put examples of overheads and their cost drivers. Examples of overheads and their cost drivers. Examples of overheads and their cost drivers. So one, we have setup costs. Number of production runs. Setup cost, number of production runs. Two, materials handling. Materials handling. Number of production runs. Materials handling, number of production runs. Production scheduling. Production scheduling. Number of production runs. Four, quality control. Number of inspections. Number of inspections. Next, we have ordering. Number of orders. So etc. Now, when we are determining a cost driver for an overhead, we use what we call judgment. We use what we call judgment and we choose the most appropriate. I cannot say that the cost driver for rent is number of kilometers covered. No. You've not used judgment. So you must use judgment and see what is appropriate. The examiner may give you several overheads and several cost drivers without telling you that this cost driver, the overhead is this one. And it just leaves you, tells you use MDC system, he keeps quiet. So you should be in position to use judgment and see which one is more applicable where. So that's why we are saying ordering number of orders. But next time you could find that number of orders are not there. They have given you another thing. So you must use judgment to see what is most appropriate where. Quality control, number of inspections. So they may not give you number of inspections, but they give you something else. You must use judgment and choose the most appropriate one. So, in simple terms, that's what we call the ABC system. So we write that different overhead absorption rates are used. Different overhead absorption rates are used. Different overhead absorption rates are used when applying
Madam, sorry, pardon on that statement.
different overheads are used when applying the ABC system, because different overheads have different cost drivers.
Pardon.
We are saying different overhead absorption rates are used when applying the ABC system because different overheads have different cost drivers. Different overheads have different cost drivers. So you see, with traditional costing system, we said that we use only a single overhead absorption rate. But this one, we have to compute different overhead absorption rates. So, like we are going to see here. So, let's write down this example. So the example, you'll find it on page 24 of the notes. Page 24 of the notes in the study pack. So here, they are telling us that suppose Mukwano Limited manufactures 4 products, W, X, Y, and Z. Output and cost data for the period just ended are as follows. So they gave you W, X, Y, Z, output units, number of production runs in the period, material cost per unit, direct labor hour per unit, machinery per unit. So below that, they told us that direct labor cost per hour is 5 shillings. Overhead costs are as follows. Short run variable costs, 80 shillings. Setup costs, 920 shillings. Expediting and scheduling, 9,100 shillings. Materials handling, 7,700. And total is 3,800. Required, part A, allocate the overheads to the products on the basis of traditional costing. Then 2, they want you to allocate the overheads to the products on the ABC, on the basis of ABC. So these are 2 different methods, and we want to see their distinction. Of course, in the exams, the examiner may bring a number where he has already computed for you profits. For example, profits as per traditional costing. Then it tells you to advise whether ABC is a better system than traditional. So we need to see whether the profits from ABC are better than the profits from traditional. But also in MDC, they don't normally ask us to compute using the traditional costing system, but they normally ask us to distinguish between the traditional and the ABC system, simply because once you know how to distinguish between those two, that means you can clearly explain how the two differ, and you can also illustrate by computation how the two differ. So we are going to do this number using ABC and also traditional. But something you should note about these two systems, they don't give the same answers. Why? Because their methodology is different. So we are not going to get the same answers. So we are going to start with traditional costing. So let's start with traditional costing system. So part A, allocation of overheads. Using traditional costing. Allocation of overheads using traditional costing. So remember, in this case, we have 4 products, W, X, Y, and Z. So come and show W, X, Y, and Z. Now, traditional costing system and ABC system, those two are only used in allocation of overheads. They are not applicable for direct costs. Why? Direct costs don't need apportionment. They are already direct. So for them, we don't have any challenge with them, but the challenge is on overheads. So when the examiner gives you a number having both direct and indirect costs, you start with the direct costs. Now, someone may wonder, what are direct costs? I told you that direct costs are variable costs. But direct costs, once you see labor cost per hour, it is a direct cost.
Excuse me, madam, you broke. You broke and we didn't hear you.
I'm saying that these two systems are only applicable for overheads. They are not applicable elsewhere. And also, these systems here, you must see whether you have a direct cost or an indirect cost or all. So you must see what the examiner has given you. The examiner can give you both direct and indirect costs. The examiner can only give you indirect costs. So you must see. But the direct costs are always per something. Like if it gives you a labor cost per hour, that is a direct cost. If it gives you a material cost per unit, that is a direct cost or a variable cost. So we are going to start and assess the question that we have, whether we have direct costs or we don't. So they started by giving us output in units. So we can also show the units for each. So I can come and I show units. So units, W we have 10, X we have 10, Y 100. Z 100. 100, 100.
Excuse me, madam. I can't hear you.
So I've said that. Let's first of all show the units. So the units are there. So when we finish showing this, we are going to show if we have the direct costs, we show the direct costs first, then the indirect costs. But when we have only indirect costs, then we show indirect costs. So I'm going to come and I put shillings, 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 and shillings. So we come and see whether we have direct costs or we don't. So from the question here, do we have direct costs or we don't have direct costs?
We have.
So which direct costs do we have there?
Direct labor cost per hour.
Hours.
So we have a direct labor cost, but the direct labor cost is per hour. So that means it's 5 shillings per hour, meaning that if I want to see the labor cost for product W, I'm going to get 5 times the number of labor hours for W. So I come and I show the direct labor, or I can show the direct cost first. So I can come and I show direct costs. So we start by showing the direct labor. So the fact that they've said it is a direct labor cost per hour, we need the labor hours. So we ask ourselves, were the labor hours given to us? Because this cost is per hour, and which hours? Labor hours. So did they give us the labor hours or they did not?
They did.
Where are the labor hours?
Direct labor hours per unit.
So they gave
We
us
have the
here
same one.
direct labor hours per unit.
Yes.
So for us, we need labor hours, not labor hours per unit. We need labor hours. But the labor hours given to us are per unit. So what I'm going to do, I'm going to come and show direct labor brackets working 1. So in MDC, when we have computations to do, especially if those computations are detailed, we create workings. So direct labor, we are going to create a working and we say working 1. So I create a page for workings. So we go and create a page for workings. So 1, direct labor. And we are saying to get the direct labor, we need the labor hours first. So we need the labor hours. So we need labor hours. Now we come and write our products. We have W, we have X, we have Y, we have Z. So W, X, Y, Z. So this helps your work to be understandable and also organized. So labor hours are the ones we need. But the labor hours they have given us are per unit. So how do we change these labor hours per unit into labor hours? Yes, anyone with an idea?
By multiplying the number of units times the labor hours per unit.
So we are going to get the labor hours per unit and multiply them with the number of units. For example, product W, the labor hours per unit 1. The number of units are 10. So that means just 1 unit used 1 hour, and yet they produced 10 units. For us, we want to know how many labor hours did they use for these 10 units? If each unit they used 1 hour. So to know those hours, we are going to get the labor hours per unit 1 times the number of units 10. So that gives us 10 hours. When we go to product X, the labor hours per unit are 3. That is for just 1 unit, but these people produced 10 units. That means to get the total labor hours they used, we are going to get 3 times 10, which gives us 30. We go to Y. Y, the labor hours per unit 1 times the number of units 100. So 1 times 100, which is 100. Product Z, we have 100 times 3, or 3 times 100. 3 times 100, 300. So meaning in total, so in total, how many labor hours did these people use? Yes?
240 hours.
440. Is there anyone who has not understood how we've computed the labor hours? If those labor hours given to us were not per unit, if they just said labor hours without per unit, we'd just use those labor hours the way they are. But now these labor hours are for just 1 unit. That's why we have to multiply with the number of units to see the total labor hours used for each product. So I hope everyone has understood that. So now we need the labor cost. They told you that the direct labor cost per hour is 5 shillings, meaning that when I need to see the cost for product W, the labor rate is 5 times the number of hours. So in other words here, I'm going to come still in the same working. I come and I show labor cost. So I'm showing the labor cost now. So product W, we are going to have 5 times the number of labor hours, which are 10. So if the examiner told me labor cost per unit, I would be multiplying with the number of units. But now they are saying per hour. That's why I'm multiplying with the number of hours. So this gives us 50 shillings. X 5 times the labor hours here for X 30. That gives us 150 shillings. Y 5 times 100. 500 shillings. Z 5 times 300. So that gives us 1,500 shillings.
Madam, the 5 stands for what kindly?
The labor rate per hour, which was given to us. They told you the direct labor cost per hour is 5 shillings. For every labor hour you're going to incur 5 shillings. So if I want to know product W, the labor cost, I'm going to get 5 times the number of hours they use to produce W, and so on. So 5 is the labor rate given to us. So I go back to my table above. Under W, I put 50. Here I put 150. Here I put 500. And here I put 1,500. And we finished to show the labor cost. Anyone with a question, please ask. So everyone has understood. Move to the next. Do we have any other direct cost other than labor?
Yes, direct material.
So we have direct material cost per unit. So the direct material cost is per unit. So that means we are going to multiply with the number of units which were directly given. So I can come and I show material cost. So if the working is not detailed, you can just show it here on the face without you creating a working. So material cost, they have told you it is per unit and you know the number of units. For example, product W, the material cost per unit is 20 and the number of units are 10. So we are going to have 20 times 10. So 20 times 10 giving us 200. We go to product X. Product X, they have given us material cost per unit 80. So we are going to multiply with the units which are 10. So 80 times 10. This is equivalent to 800. Go to the next. The next product, the material cost per unit is 20. So 20 times 100. This is 2000. Then product Z. Product Z, we have 80 times 100. So 80 times 100. This is 8,000. So that's what we have. So if they had only said direct material cost without the word per unit, we would not be multiplying with the number of units. We would just take those figures directly. But now the material cost is per unit. That's why we are multiplying with the number of units. So we finished the direct cost. We can come and get the total direct costs. So total direct costs. So here we have 250. Here we have 950. Here we have 2,500. Here we have 9,500. So finished to show the direct cost. Like I told you, another name for direct cost is variable cost. So you can say direct cost or you can say variable cost. You mean the same thing. Anyone with a question before we proceed to the next thing? So now, I
Madam,
told you
can
that.
you scroll up a bit from the start of the solution?
So I told you that when we are looking for total costs, we have direct costs and indirect costs, or direct costs and overheads. So we've completed the direct costs. Now we move to the overheads or the indirect costs. So let's go to the overheads. Overheads. So we go and see the overheads. So the examiner told us that overhead costs are as follows: short-run variable costs, setup costs, expediting and scheduling, materials handling, to give us a total of 30,800. So this is where the traditional costing system principles are going to be used when we are allocating the overheads. So I'm going to come and say working 2. Reason being, we cannot allocate overheads without us using an overhead absorption rate. So I go under working 2 and I show that we are looking for overheads. So whenever we are looking for overheads under the traditional costing system, we compute a single overhead absorption rate. And how do we get that single overhead absorption rate? We get our total budgeted overheads to budgeted overheads over the total activity level. However, we don't need to say over the total activity level. Once you know the activity level to use, then you don't need to again tell us activity level, specify it. I told you that whenever we have labor hours under the traditional costing system, the activity level we use is labor hours. So I can just say over total labor hours. So if the labor hours are not given to me, but the examiner has given me machine hours, then I say divide by total machine hours. If the examiner has not given me machine hours, but he has given me output, then I say divide by the total output or total units. So depending on what I have. So we come and substitute. We go and see our total overheads. The total overheads, all the overheads at once, their total is 30,800. That's what they have told us. So total budgeted overheads, 30,800. Divide by the total labor hours. What is the total for the labor hours?
440.
440. That's what we started by looking for in working 1. Remember, labor hours, we got a total of 440. So since we are taking the total overheads, even the labor hours, we take the total so that we can look for an overhead absorption rate. So that we can look for an overhead absorption rate. So we get 70 shillings per hour. A rate is always per something. So sometimes the examiner can even compute for you a rate. So whenever you see shillings per something, that implies that he has given you a rate to use. So here we are going to put 70 shillings per hour because you have divided with the hours. So you come and allocate that cost. So we come and show product W. We are using 70. So that rate is going to be applicable for all the products. So meaning a product with the highest number of hours is going to take the highest overheads. So product W, it is 70 times the number of labor hours. They are 10 for product W from working 1. So times 10 to give us 700. X 70 times the labor hours for X. The labor hours for X, we got 30. So what do we get there?
$2,100.
Y 70 times the labor hours 100 give us 7,000. 70 times 300 to give us 21,000. So that's what we are going to take above. 700 to 100, 7,000, 21,000. And we finish to allocate the overheads. So we can get the total costs. Remember, total cost, we get the variable cost plus the fixed cost, or direct cost plus the overheads. So come and get the total costs. So add the total direct and the overheads to get the total. So what is the first total?
950.
Next. Next one we have
305.
30.
50.
9,500. Then 30,500. So we can even get the cost per unit. So remember, cost per unit looks at the total cost divided by the number of units. For example, W, you have 950, divide by the number of units. Remember, you started by showing the units. W, you have 10, so have 950 divided by 10, which is 95. Next, you have 3050 divided by the units 10 to give you 305. Next, you have 9,500. So compute the cost per unit. Cost per unit looks at the total cost. So cost per unit looks at the total cost over the number of units. So if you want to compute cost per unit, you get the total cost divided by the units. So the total cost, you've computed them. The number of units, you also indicated them when you're just starting the table. So it is total cost divided by number of units. So cost per unit, 950 divided by 10, which is 95. 3050 divided by 10, which is 305. 9,500 divided by 10, 100, which is 95. 3,500 divided by 100, which is 305. And that is all about that. So anyone who has a question about the traditional costing system, please ask. Traditional costing before we go to ABC. So remember, the question was allocate the overheads to the products on the basis of traditional costing. That is how we allocate. Then in part B, they said allocate the overheads to the products on the basis of ABC. So if there is no, David, I see your hand is raised. Do you have a question?
I wanted to consult on the last part. I thought we're dividing for Z times. We are dividing with 300. Why 100?
Divide by the number of units. Look at up where you started from, the units you wrote.
Okay. It's okay. Thank you.
So the 300, those are labor hours. We are using units here. Get the cost per unit. So let's look at part B. Using ABC system. Using ABC system. So come and show the products W, X, Y, and Z. So we come and show the units for each. So the units, W, they gave us 10, X 10, Y 100, Z 100. So whether you're using traditional or ABC system, your direct costs are not affected. So the variable costs are not affected no matter which method you're using. So it means that I'm going to come and put shillings, shillings, and shillings. So I start with the direct costs and I bring them just like they were before. So direct costs. So we have direct labor. So direct labor. So direct labor for product W, we already computed that cost for direct labor, 50, 150, 500. 50, 150, 500, 1,500. Direct materials. We also bring the cost. So direct material costs, we got 200, 800, 2,000, 8,000. So with the total, we also bring the total direct materials. So total direct costs, total direct costs by adding. So this is 250, 950, 2,500, 9,500. So finished to get the total direct costs. So move to the overheads. Now, this is where the technique for ABC system comes in. So with the ABC system, we believe that each cost has its own cost driver. So we don't believe that all costs were caused by the same factor. So what we do, we list each cost separate. So I come under overheads, I go and I look at the question, which overheads were given. I list all of them. So you see, they gave you short run variable costs. I come and I show here, short run variable costs. So this one is going to have a working. So our last working was was it 2? So this is going to be 3, working 3. Write the next overhead, setup costs. So setup costs, working 4. I go to the next. Next is expedite
Madam, we've lost you.
We are copying those costs given to us. Next is materials handling. That is the last one. Working 6. Materials handling. Working 6. So all the overheads they gave us, we've listed them, and each of them has its own working. So the first overhead we have is short-run variable costs, and that is going to go under working 3. So like I told you, you need to have a separate page for workings. So I hope you have that page. So working 3 is about short-run variable costs. So when we are using the ABC system, the first thing we are going to ask ourselves, which factor causes this cost? So we must always identify cost drivers first. So we first look for cost drivers. So come and say cost driver is, so we use judgment. So we ask ourselves, what are short-run variable costs? Short-run variable costs are those variable costs that you incur in the short run. And when we talk about a short run, we mean a period less than 1 year. So the variable costs you incur in a short-term period of less than 1 year. So I need to understand which factor could cause those costs. And the variable costs, like I told you, you have labor costs, you have material costs, all those are variable costs. So what could cause these short-term variable costs? So you look at the different factors that the examiner has given you, you use judgment and know what could bring short-term variable costs. So what do you think could bring variable costs in the short term? Like you've just started operating and then you incur a labor cost or a material cost. You've just started operating. What could bring about that?
Labor hours.
So normally, it is labor hours. Why? Production runs relate to machines. And in the short term, when you've just started operating, you don't use machines because at that time, you're just setting up the business. So you start by employing people you are going to use. So because machines involve technology, which sometimes may be expensive. So when you've just started operating, we don't expect you to start with machines. We expect you to start with labor. So even when in future you're going to operate using machines, still you first recruit the labor, train it, that will operate those machines. So in the short run, by all means, labor is the one that brings the short run variable costs. But which cost driver relates to labor? It is labor hours. Because the more labor hours you use, the more of these variable costs you are going to incur, like labor and materials. So meaning that the cost driver here is going to be labor hours. So I'm going to come and say cost driver is labor hours. The examiner is interested in seeing you talk about the cost driver because you're showing him the basis you're going to use to allocate your costs. So that's why the examiner expects you to show these cost drivers. So unless the examiner has told you short run variable cost driver is labor hours, then you don't need to show us the cost driver because he has already told you. So when he hasn't told you, you have to first of all show the cost driver. So we come and compute the overhead absorption rate. So the overhead absorption rate is that rate going to help us allocate this overhead here. So we go and look at the overhead we want to apportion. How much of this overhead did they incur? They incurred 3080 shillings. Of just the short run, we don't need the total. We are looking at short run variable cost. That's what we are apportioning. So I get the cost for that short run variable cost, 3080, divide by the total cost driver. The cost driver is labor hours. So I need the total labor hours. So what is the total for labor hours?
440.
440.
440. So 38 divided by 440, what do we get?
7.
7 shillings per hour. So I go and I allocate that cost. So product W, I'm going to have 7 times the labor hours for W. So how many labor hours do we have for W?
We have 10. 10.
Times 10, giving us 70. X, we have 7 times. How many labor hours do we have for X?
30.
So times 30 to 10. Y, I have 7 times how many labor hours?
100.
100, giving us 700. And then Z, 7 times 300, which is 100. So we don't need to get the total simply because if you compute the total, it will take you back to what you've apportioned, which is 3080. So you don't need to get the totals. So I go back to my statement above and I put 70 under W, 210, 700, 2100. So anyone who has not understood this, please ask before we go to this next. So everyone has understood. Let's move to the next. That is working number 4. So working number 4, setup costs. So whenever you see setup costs are relating to machinery because it is the machines that are being set up. So when we have setup costs, we come and write the cost driver. So what do you think is the cost driver for setup costs? Yes?
Number of production runs in the company.
So number of production runs. Even when we're putting examples of overheads and their cost drivers, we said setup costs, we have number of production runs. So when a cost is machine related, normally we use number of production runs. So come and compute. So the OAR will be the cost we are apportioning. Remember, we are apportioning setup costs. So we go and see how much of the setup costs we've been given. So we've been given 10,920. So we get 10,920 divide by the total cost driver. Remember, your cost driver is number of production runs. So we need the total for the production runs. So go back to the question.
14.
So they have told us number of production runs in the period, the total is 14. And those production runs are not per unit. If they had told us number of production runs per unit, we would have first multiplied with the number of units, but they are not per unit. So divide by 14. What do we get there?
780.
780 shillings per run. A rate is always per something. So what you've divided with, that is what you say per. So we come and show product W 780 times the number of runs for product W. So the number of runs for product W, you have 2. So 780 times 2 x 780 times 2 y 780 times 5 z 780 times 5. So what do we get? 780 times 2. Yes.
1560.
1.
560.
Then y. Y, what are we
Seven.
getting?
7,300.
7,300.
3,900.
Why?
3,900. So we also take those figures up.
3,900, not 7.
3,900, not 7.
3,900. 3,900. So 1,560. Expediting and scheduling. So expediting and scheduling. So cost driver. So expediting and scheduling, this is also related to machines because it is the machines that are being scheduled. So when you see a machine relating cost, normally we use number of production runs. So cost driver is number of production runs. So I cannot use labor here when the machines are doing their work. They depend on how many times they are running. So the production runs, that is the number of times the machines are running. So when you want to schedule the machines, you depend on the runs they make, not on the labor. So here, the OAR is equal to the cost we want to apportion. So expediting and scheduling, they have given you 9,100 divided by the total number of production runs, which are 14. So what do we get there?
650.
650.
Shillings per run.
650 shillings per run. So W. So come and show W 650 times 2.
There's 1,300.
Let me share the screen again. X 650 times 2 the same. Y 650 times 5.
3,250.
3,250. Z 650 times 5. 3,250. So we don't need to get the totals. So we go and we show that.
I beg your pardon, madam, for the expediting and scheduling.
The cost driver.
Yes.
So expediting and scheduling is a machine relating cost. Machine relating cost, we use number of production runs. We don't use labor. Labor, like I told you, when machines are introduced, labor have no work to do. So it means that it depends on how long the machines are running. That's why we use number of production runs for labor relating cost, for machine relating costs.
Yes. Okay. Then how did we get the 9,100? Because I seem to have
Expediting and scheduling, the cost they gave you from the question. So it is the
Oh.
cost you are apportioning. The cost we are apportioning is expediting and scheduling. What is the cost? 9,100. Just like we've done for short run variable cost, setup cost. So it is that cost divided by the total cost driver. I hope you've understood. So we move to the next. So lastly, that is 6. So working number 6, we have materials handling. So materials handling, we come and write the cost driver. So the cost driver is what?
Number of production runs.
Number of production runs. Simply because this is a labor related cost. So once it's a labor related cost, then we use number of production runs, unless otherwise. So here you're using number of production runs.
Madam, come again. You said it is labor related, then we use number of
Sorry, it
production
is
runs.
machine related. It is a machine related cost because the materials are being handled by the machines. It's the machines doing the production. So it's a machine relating cost. So we are using number of production runs. So if it's a labor related cost, then you use labor hours. But now this is machine related. So OAR is equal to the cost you are apportioning, that is the material handling cost. They have given us 7,700.
Madam, what you mean that if any item is a machine related, we use the production runs?
Depending, because if they give us number of orders, we have to use, if they give us the ordering cost, we use number of orders. So you have to see, sometimes the examiner may not even give you number of production runs, and he gives you other factors. So it depends on what he has given you in the question. So you match the cost and the appropriate cost driver. So this is because according to the information we have in the question, this is the most sufficient. So that's why I told you that we use judgment. So in another question, you're going to find something different, like the numbers I'm going to give you as your take homes. So what do we get there?
550.
550 shillings per run. So the material handling, so who is handling the materials? It is the machines. And what are machines depending on to handle the materials? They are depending on the runs that are being made. So the more runs that a machine is making, the more material handling cost you are going to incur. The less runs, the less material cost you are going to incur. So 550 times 2. X, we have 550 times 2. Y, we have 550 times 5. Z, 550 times 5.
First one is 1,100.
1,100.
Same applies to the second one. 2,750. The third.
So take this up. 1,100, 1,100, 2,750, 2,750. So we've completed all the overheads. So come and get the total costs. Remember, total costs are equal to the direct costs plus the indirect costs. So we've completed the indirect costs. So add those figures to the direct costs we already computed, so you can see the total cost for each. Total costs.
$4,208 for what, W?
But that was the beginning. It affected
Or
of course,
280.
was a broken port, right? But it's more
5120.
Next.
13,100.
21,500.
851.
Is 21,500.
outside there is waiting for you.
21,500.
Yes.
It's 21.
Come and so best advice.
So we can get the cost per unit. So cost per unit, just like we did for traditional. So it is the total cost divided by the number of units. So W, the total cost is 4280 divided by the number of units, 10. So that means we have 428, here 512, here 131, here 215. And that is it while using that system. Anyone with a question about that, please ask. So everyone has understood. So let's look at a past paper number relating to what we've covered here. So let's look at May 2024, question 3. May 2024, question 3. May 2024, question 3. The rest will be your assignment numbers. So here they told us that Nile Transporters Limited, NTL, deals in transportation of passengers within and outside Uganda by road. NTL's management is more concerned with the declining profitability levels of transport since 2022, which most of the management members attributed to the current economic challenges. However, the finance manager attributes it to the choice of costing system and quality of services. The finance manager has always advocated for MDC system, which management considers to be for manufacturing firms. The managing director accepted that increased customer complaints and accident compensations are indicators of poor quality services. She resolved to introduce quality standards manual for staff to boost customer satisfaction and retention. NTL charges, so NTL charges, so NTL charges, yeah, 30,000 and 125,000 per passenger for local and international transport, respectively. Then they said variable cost per passenger amounting to shillings 25,600 and 119,000 is normally incurred in to local and international transport, respectively. All overheads are absorbed on volume basis. NTL registered 327,895 local passengers and 159,532 international passengers. During the year ending 30th June 2023, below are the overheads incurred during the year ended 30th June 2023. So they gave you those overhead: rent, office staff costs, telephone costs, stationery and printing costs. Below are the resources consumed during the year ended 30th June 2023. So they gave you local and international transport, number of telephone calls, personnel man hours worked, floor space and square meters, number of paper rims taken. Required: advise NTL's management on whether to adopt ABC system. The factors affecting customer satisfaction. Any two categories of quality costs that can be incurred in implementation of quality standards manual. Give examples of specific costs. So I'm concentrating on part A, whether to adopt the ABC system. Now, they told us that NTL registered 327,895 local passengers and that international passengers. These people are dealing in transport. So they have the local passengers and the international passengers, but they are not happy about their declining profitability. However, someone is recommending that they should use MDC system to have a better performance. So that's why they are asking us whether to adopt ABC. In other words, should they go ahead and adopt ABC or they should not? Their problem is about profitability. So that means if we are to advise, our basis of advising should be profitability, because that's their problem. So in this case, we come and show the two products we have. We come and show local transport. So we are going to come and show local transport. The next, international. So we have local transport, international transport. International transport. So remember, we want to analyze the profitability. So whenever we are computing profit, profit is equal to revenue minus total costs. That is the formula for profit. We know that profit is equal to revenue minus total costs. But in the total costs, we have the fixed costs, we have the variable costs. In other words, we have the direct, we also have the overheads.
Madam,
in
you're
this case-
breaking. Your network is not clear.
So let's come and show. We have the local transport and international transport, but they've given us the passengers for each category that they registered during the year ending 30th June 2023. And remember, this is the specific year we are also interested in. So I can start by showing the passengers. So passengers, local transport is 327,895. 327,895. International, we have 159. So 159,532. So from there, remember we are going to look for profit. So revenue minus total costs. So we are going to come and show shillings here. So we are going to start with the revenue. Now, remember revenue is price times quantity. So they've told you that NTL charges 30,000 shillings and 125,000 shillings per passenger for local and international transport respectively. So remember, revenue is price times quantity. So they've given us the prices they charge per customer, per passenger for each category. So I'm going to come and I show here revenue. So revenue. So the price for local is 30,000 per passenger, but you've already indicated that the passengers are 327,895. We go to international, the price is 125,000 times the passengers 159,532. Also, you can decide to cut off the thousands. So you can say shillings in thousands, so that you know that the amounts you're going to put here don't have the thousands. So 30,000 times 327,895, what do we get?
9,836,850.
Then next.
The next is 19,941,500.
So finish the revenue. So if we have costs, we have to see whether they have given us both direct and indirect, or they have only given us the indirect. So we go back to the question and we see which costs we've been given. So do you have the direct costs there?
Yes, the variable cost.
So they gave us the variable cost per passenger. So we come and show variable costs. So variable costs. So local, they've told us that the variable cost per passenger is 25,600 times the passengers, which are 327,895. International, 119,000 times 159,532. So what do we get for local? Yes.
For local, it is 8,394,112.
Is everyone getting the same?
Yes.
So the first one is, and we are putting it in brackets because we are going to less from the revenue. So what you've said it is?
Eight, 394,112.
Just a minute. It is
839,112.
2,000. 2,000.
112, but we've cut off the thumb. Like that. Yes.
Yeah.
Then the second one.
18 million 984,308.
So whenever we have revenue minus the variable cost, that gives us contribution. Revenue minus variable costs alone, that gives us contribution. So come and show the contribution. So get the revenue, subtract the variable costs so that we can see the contribution. Please hurry up. I want us to finish this number before time.
Contribution local transport.
Yes.
1,442,738.
Next.
957.
957,192.
957.
192.
But madam,
Yes.
me, I'm not getting the same value. I'm getting some zeros after that too on the variable cost of the local transport.
When you get
You're not-
25600 times 327,895, the answer
Yeah.
you get, we've cut off the 3 zeros up.
Okay.
So that's what we did. 30,000 times 327,895, and we took 9,836,850, and we ignored the other 3 zeros because we cut them up.
Okay, madam. Thank you.
So 95719.
192.
Only.
Yeah.
Yes.
So move to the next costs. So we go and see what they have given us. So according to the question, they said below are the overheads incurred during the year ended 30th June. So come and show the overheads. So overheads are the indirect costs or the fixed costs. And we are using ABC. So when we are using ABC, we have to write each cost separately. Each overhead cost separately. So we come and rate the overhead costs separately. So we have rent, office staff costs. So rent, office staff costs. Then they have telephone costs. Then they also have stationery and printing costs. Stationery and printing. So all these are going to have their own working. So rent, I can call it my working 1. Office costs, working 2. Telephone costs, working 3. Stationery and printing, working 4. So I go to the workings. So we go and create a page for workings. So let's go and create a page for workings. And we are starting with working 1, which is rent. So we are going to go. So that page should be special for workings. So I'm creating a page for workings. So working 1 is about rent. So the examiner did not tell us the cost driver, meaning that from the information given to us, we must choose the most appropriate cost driver. So what do you think is the most appropriate cost driver for rent?
Floor space.
Floor space.
So they've given us floor space in square meters. So we'll come and show that cost driver is floor space. So come and look for the OAR. So the cost you are apportioning, which is rent, they have given you 128,000, and they have cut off the thousands. We also cut off the thousands, so we can just take it as 128,000. So come and show 128,000 divide by the total floor space. So we divide by the total cost driver for the products we are looking at.
$120,000.
100,000. 200,000.
Total is for the two products. That means you have 120,000 plus 80,000, the
Okay.
total. So that gives you 200,000. So what do we get?
0.64 shillings per meter.
0.64 shillings per square meter.
Excuse me, madam, where have you got 200,000?
Total floor space. Look at the question. What is the total floor space? Total.
Excuse me, madam.
Floor space.
Excuse me,
madam.
the 640.
Excuse
Yes.
me.
Yes.
I thought that that local transport we shall work on independently and international transport work on it independently.
When you're using the cost driver, you use the total cost driver. When you're looking for the OAR, we use the total cost driver.
Okay.
But when we are allocating, we are going to compute for each. After computing the OAR.
Excuse me, madam.
Yes.
I'm getting 640 because the total cost under rent is 120 million. So if you're dividing it over 200,000, that means you're supposed to include the other zeros of 120. Yeah. 128.
Okay, if you want us to first compute the rate having the thousands, 128,000 divided by 128 million, because some people may get confused. 128 million divided by 200,000, what do we get?
640
shillings per square meter. So meaning that we come and show local is going to be 640 times the number of square meters for local, because we are now allocating. So times the number of square meters for only local. So how many square meters do we have for only local?
120.
So 120,000. International, we have 640 times the number of square meters for international, 80,000. So what do we have for local?
76,800.
800,000. 76,800 million or 800,000?
1,000.
Then 640 times 80.
51,200,000.
51.
200,000. Yes, 51,200.
So meaning for local, we are taking 76,800 without the thousands, because we don't want the thousands. Then international, we are taking 51,200 without the thousands in brackets, because these are costs which we are going to subtract from the revenue or contribution. So anyone who has not understood that, please ask. Everyone has. We go to working number 2. So working number 2, office staff costs. So come and identify the cost driver here. So cost driver is
Personnel man hours worked.
so here personnel man hours worked. That is the most appropriate. So we are going to come and say is personnel. So some may be close, but we are looking for the closest. So personnel man hours worked. We come and look for OAR. So when we look at this cost, they have given us 10, 4, 8, 50,000. Divide by the total number of personnel hours worked. So let's get the total.
1,500.
500.
1,500.
2,500.
Is 2,500.
2,500. So how much is that?
$419.42.
I hope everyone is getting the same.
No.
Madam, you first go to the question. It seems it's 2,000.
It is 420, not 42.
419, 420.
Yeah, if we are considering all the 3 zeros, it is 419 for 20.
No, I'm trying to make I want to be confident.
We said we consider all the 3 zeros, isn't it?
Yeah, yes, now
Yeah,
that
well,
answer is when we consider
it is
minus the 3
419
zeros.
for 20.
So it's 419 for 20.
Local 1482. International 1018. So what do we get there?
62158 440.
621
580
440.
440.
and the second one
426 969 560.
So we go and take that to the statement above. 621. And remember, we are not considering thousands. So that means after getting those values, we are dividing them by 1,000. So that means we have 621, 580. 621, 580.
0.44.
0.44. Then the next one is going to be 426969 426 969
0.56.
0.56. We go to the next telephone calls. So that is 3 telephone calls. So telephone cost, what is the cost driver here?
The number of telephone calls.
Number of telephone calls. We'll come and look for OAR. OAR. So the cost of telephone cost 28,901 thousand divided by the total number of telephone calls.
1,000.
So what is the total number?
2,000.
2,000.
2,000. So what do we get?
One 445.
Shillings per call. So local 1445 times the number of local calls, which are 920. Next we have international.
Excuse me.
Yes.
Isn't it 14,450.5 or you've rounded off?
I don't know what you've got.
My answer
It
is
is
different.
40.5.
14,450.5.
Shillings per call. So here times 920. $10,450 times 1080. So what do we have?
For local, we have 13.
Pardon?
Local, we have 13 to 94 for 60.
So this is local. 13,294 for 60. Then international.
15,606 540.
So we go and plot the statement above. So 13,294 point 46. Then 15,606.
0.54.
0.54. Lastly, stationery and printing. So stationery and printing, that is working for So stationery and printing, what is the cost driver?
Number of paper rims taken.
So cost driver is number. Number of paper rims taken. So 256,830,000 divide by the total number of paper rims taken. So what is the total paper rims taken?
1050.
1050.
50.
So 256,830,000 divided by 1050. What do we get?
244,600.
244,600.
Like that?
Yeah.
Shillings per rim.
It is 244,600.
Yeah, it is 6006.
600.
So local 244,600 times the number of rims taken 645. So international 244,600 times 405. So what do we have?
157.
So it is
1577.
157. It is 1577.
67,000.
So in the statement, we are just taking 157,767. Then international
99063.
99063.
So come and get your profit. If it's a loss, you show a loss. If it's a profit, you show a profit. Please compute very fast. We need to see the profit or the loss.
You can't sleep. Can't sleep. Tomorrow you have to go to church.
The first profit is me what I'm getting. I have 573 296.1 for local transport.
The rest are also getting the same.
I'm also getting the same.
Madam, how are we getting the profit?
We are getting the contribution and subtracting the overheads.
Thank you.
The second one is 364,352.9.
The first one is
573,296.1.
Second.
364.
352.
352.9.
0.88.
0.9.
0.9. 364. 352.
352.
0.9.
0.9.
So if we are to use the ABC system, that will be our profit. Now the examiner is telling us to advise on whether they should adopt the ABC system. I cannot recommend whether they should adopt the ABC system when I don't know the profit before ABC. So I need to see the profit before they introduced ABC so that I can compare it with the profit after they introduced ABC. They have told you that all overheads are absorbed on volume basis. That means usually these people are using the traditional costing system. That's why they absorb their overheads on volume basis. That means when they are computing their overhead absorption rate, the overheads, they divide them with the cost drive implies output. So meaning that here the examiner did not compute for you the profit using the traditional costing system, and therefore you must look for it. So I'm leaving you with the assignment to complete the profit using traditional costing system so that we can compare the two profits, which one is better, whether they should maintain the traditional costing system or they should introduce the ABC system. So please complete up that number and see which profit you get when you're using the traditional costing system. But also on top of that, I want to leave you with another number as well, still relating to ABC system. So aside from that, you can write down this second number to try out in your free time. This one is from, just a minute. So I want to leave you with only two numbers so that next time when we complete this, I can leave you with more than these numbers. So these are numbers for you to try out just to see whether you've understood what we've talked about here or you've not understood. So ABC is an easy thing to pass, but also difficult in case you've not practiced enough. So is there anyone with a question before I give you this number?
Madam, I have a question.
Yes.
I've not understood how we got the total contribution. I'm confused there.
We got revenue and we subtracted the variable costs. So revenue minus variable costs by formula is equal to contribution.
Excuse me, madam. I'm inquiring. After getting this profit, like what do you compare it with in terms of the traditional? Do they give it to you or you have to do some computation?
Versus the profit as per traditional system. So that's why I've told you to look for it. So example, another assignment number is from November 2018, question 5. November 2018, question 5. Please complete up that number by looking for the profit using traditional costing system, so that next time we can conclude which system they should adopt. So November 2018, question 5. Please try out those two numbers before the next class on Saturday. Have a nice weekend. November 2018, question 5.
Then the first one.
Completing up that one I've left you with, the one we've been doing. So I want you to compute profit using traditional costing system because that profit was not given to us.